All right, everyone, welcome back. Happy New Year. This is Ryan Selkis at 2-Bit Idiots for our first edition of Masari's Unqualified Opinions for the new decade. And I'm excited to have Steve Kokinos, who is the CEO at Algorand up in Boston. We realized too late that he's actually going to be in town in just a couple of hours, but we're still doing this remotely because such is life. But you should notice new and improved equipment and sound quality. These things coming out of my ears should make it a little bit easier to hear without much of a din, and certainly be a marked improvement from the 2019 version of Unqualified Opinion. So we got a lot that we're going to dive into, of course. But for starters, Steve, I always like to dig into the origin story of the people that we're speaking with before we get too deep into the weeds of Algorand and kind of plans for 2020. How did you fall down the rabbit hole and get sucked in with this crew?
Yeah, and by the way, thanks for having me. Happy New Year.
Thank you.
So in terms of crypto, I sort of had an interesting intro to it, which is I'm a serial entrepreneur by trade, and I was giving a fundraising talk at a VC's event in Boston a couple of years ago. So I think this is sort of late 16, and it was all sort of normal stuff. But a guy in the corner sort of spoke up at the end and said, well, I have sort of a slightly different problem about raising money. I've issued this cryptocurrency and I have a blockchain that we've created and applications around it. And, we're thinking we'll just sell some tokens to fund our business. And I was sort of like, whoa, that's interesting. And had been sort of introduced to Bitcoin over the few years before. I had some friends who were doing mining and really passionate about it. I just never really had a lot of time. But I kind of sort of, my eyes opened at the idea that, could represent a different way of funding and kind of thinking about how businesses evolve. And from there, really dove in, was doing work with Pillar, which is a Boston-based VC that's one of Algorand's investors, and also Union Square Ventures, and was introduced to several folks in the community. Did some sort of hobbyist mining with my kids and just in the basement of my house, just to sort of learn about different parts of the tech. But I think what really struck me was, I started my first business in the mid-90s, in the early days of the internet. And that was a very dynamic time, had a lot of sort of libertarian underpinnings, was very anti-commercial and really about decentralization and tech, ironically, which I know it doesn't necessarily seem that way now, but was also just a very vibrant community where a lot of people were really fascinated by the tech and the philosophical underpinnings of what could happen. And it was the first time I had seen anything in the 20 years since that really had some of the same feel to it. And so, more and more as I dug in, just found the space to be fascinating. And there's so many different elements to it. So it's been an adventure for sure.
How did you get excited about the Algorand project in particular? Because one of the common themes that I think we're going to hear quite a bit about this year is quote unquote ETH killers, or like new and improved versions of X blockchain, and usually it's around optimizing for a new feature or a new use case where some of these teams are trying to develop a wedge and make sure that they're able to penetrate the market and siphon off some of the developer interest, the ecosystem interest from different existing blockchains. That's a tough sell, right? But how do you see Algorand positioned as unique in this regard, and kind of what's the path to success or moving up the ranks if that's the goal?
Yeah. So what I'll let me kind of hit the first part first, and then I think sort of this discussion about how the crypto space needs to evolve, I think is a really important area. I was introduced to Silvio through Pillar and Union Square, and what really fascinated me about him was that one of the observations I had about the space is that a lot of the tech is derivative of tech that came before it. But what it really felt like was there needed to be a big step, like a big leap. And I think, using the internet analogy again, the blockchain space felt like in the internet when people were still using dial-up modems. and there needed to be kind of bigger highways built and better sort of fundamental tech. And what I really found was that Silvio had, along with really a group of researchers here, reimagined the tech from the ground up. And to me, that felt like it could, if you kind of fast forward a couple of decades, could have the same impact of something like Google. I think really there's kind of an inflection point, I think, in the market that sort of leads to what you were suggesting about Ethereum. Over here, we're not necessarily all that worried about being an Ethereum killer. I think the space has room for multiple players. I think also our point of view is that there's going to be multiple chains that ultimately kind of focus on different areas. One of the things that we are very focused on, though, is if you look at the developer community, there's about 20 million developers in the world. Less than 100,000 of them are building blockchain applications every day, and the other 19.9 million are the more likely place, just statistically, where the killer apps are going to come from. And so really making it simple for those people to engage, we think is incredibly important. And so I think if you look at kind of the way we've focused our energy, it's one, really solving kind of the hard fundamental computer science problems and building a platform that can be used at scale and that has just sort of good underlying fundamental properties for people who are issuing financial assets and transacting with each other in any way. But then the second part is making it really simple for people to just get their work done. An example of that is as part of Algorand 2.0, we released Teal, which is a layer 1 smart contract language, and there's a lot of interesting possibilities there. But what I think is an example of something that's even more interesting is we have a Python interface, so that anybody who writes a Python script can automatically compile it into a Teal script without having to ever learn anything about our smart contract language. I think that's where we need to get, is really take some inspiration from places like Stripe and make it really easy for people to add decentralized elements and blockchain elements to their applications without needing to learn all the underlying technical details of what goes on behind the scenes.
How important do you think it is? So, that makes sense if you're trying to attract real world developers and use cases, i.e. not folks that are already coming at this from like a blockchain background. But is there's always a question of whether there's an infrastructure head start or a network head start that is insurmountable just because so many other tools and companies and features have been added modularly to something like Ethereum, right? So you talk about Teal as I guess as a substitute for ERC20 tokens, right? What is particularly enticing about doing a security token like the World Chess project is doing on Algorand versus through an ERC20 or something on like Binance chain, because that's married at least to like the most liquid exchange. I'm trying to figure out what the selling process is and really how you get people excited to onboard to Algorand, particularly in the first half dozen or so test cases.
Sure. Well, I think there's a few different things. One, definitely simplicity is a focus, and also, that boils down into kind of all of our developer documentation. Separately, though, if you look at what Algorand 2.0 represents, Teal is one part, but it's really three parts, and all of them are done in layer 1, which I think is an important distinction. So there's scalability and finality, which we find as people have assets that are of increasing value really matter to them. You need to know who owns what. You need those things to transact quickly. And if you look at the three big features that we rolled out as part of Algorand 2.0, one is our ASAs, which are standard assets. That's our sort of token creation, asset creation function. And having that in layer 1 means that any asset created in Algorand basically takes on all of the properties of the underlying chain itself. So scalability, speed, finality, and it does that in a way that's safe and secure. I think one of the problems that has sort of crept in but is overlooked a bit in kind of the Turing complete smart contract realm is that flexibility is nice because people can do a lot of things. It also carries side effects with it in that there's a lot of security problems. We've seen a lot of bugs in smart contracts lead to loss or theft of money. And by doing it in layer 1, you can avoid a lot of the potential pitfalls that come up there. So I think that's one around asset issuance. The second is, what do people want to do with assets? Ultimately, they want to exchange them. And we think being able to do that atomically is a big problem. So atomic swaps of any type of asset for any other type of asset, whether one person at a time or multiple people contributing multiple kinds of assets, being able to do that in one transaction and have that be also a fundamental kind of part of the protocol in layer one is important. Because we hear from people all over the market, and especially these are people more entrenched in the blockchain space, that this problem of who goes first when you're contributing an asset is a big problem throughout, especially the crypto finance world, as people are developing new applications. And so solving that kind of in one shot was, we thought, something that just needed to be done fundamentally. And then the third thing is, well, you have assets, you have people that want to exchange them. What conditions do you set to do that, and how do you set those conditions in a way that's also safe and keeps them, keeps it from being potentially problematic from a security standpoint, and also does all of that at the same velocity and scale that the entire network runs at. And so I think when we dig into that with people, what we hear are a lot of concerns around other platforms where potentially things like transaction fees are sort of uncertain and very variable, especially due to congestion. The other is just the ability to transact quickly with immediate finality and know that they'll be able to do that as their own application scales and businesses grow is of increasing importance. And I think what we found is that, even though there are vibrant communities around other platforms, there are also people that for sure have applications of scale and are starting to grow their businesses and just don't have a tractable way of continuing to grow that on some of the platforms that exist that are sort of version one things. And so I think what we've found is that definitely there's some people that feel that more acutely than others. I think the ones that do, we've had a large number self-select to kind of start participating in the Algorand community. And I think that's sort of led to a virtuous cycle of feedback and helped inform some of the features that have been rolled out. But we've seen even just in the couple of weeks since Algorand 2.0 was launched, there's over 200 assets that people are working on on our test network. So I think we're seeing interest out there for kind of a different approach to the tech than has been done before.
Let's talk about the tech a little bit. And this is always a little bit dangerous because
Sure.
there's so many lofty claims. Every team that I have spoken with in the last 2 years, it's building some type of smart contract platform, has a high throughput, more secure, more developer friendly, version of the contract language itself. And your team certainly has a credibility to back some of that up. So can separate from the pack, at least in terms of background in academia and just in tech in generally. But let's try to go through the very basics of how Algorand is different structurally and how it can achieve some of these speeds and at least in theory, we'll see how battle tested it is, but certainly in theory and early on in practice, what's made the security model work and how does everything work under the hood? People are very familiar with, Bitcoin's proof of work. They're getting familiar with proof of stake systems, but you certainly have a unique distribution schedule and method versus most other proof of stake systems.
Yeah. Well, a couple of things. One, I would encourage anybody who's interested to go, take a look on our website. Not only for the tech, we have a terrific team here, both in the science and research side, engineering, business. I think it's a lot of accomplished people here who really believe in the task. And that really starts with Silvio. So I think just for folks who aren't familiar, Silvio's a Turing Prize winner. He's really one of the founders of modern cryptography. And one of the things that we're committed to standing for is actually delivering on the things that we put out there. And I think if you look at the Algorand release in June of this year, that was like proof point that the protocol works as it was designed and as the theory suggested. Algorand 2.0 was really a response to feedback from the market and bringing kind of a new set of primitives into layer one. And we'll continue to drive innovation, and we think that's important. But I also do want to just point out that we are delivering on everything that we say. We deliver on regular schedules, and I think that's something that the community needs more of. And, we're happy to, not only kind of be leaders there, but also collaborate with other people that are bringing interesting tech in. Give a little bit of the origin story, and then I'll jump into kind of how Algorand works. Silvio and a team of researchers from MIT and other places that are all very well known in not only the fields of cryptography, but mathematics, theoretical computer science, and others, felt that Bitcoin and then Ethereum were incredibly innovative and interesting, but also technically flawed in ways that would make it very difficult or impossible for them to be adopted by the whole world if this is the way that people were going to transact with each other going forward. And the reason that throughput is sort of difficult is that distributed computer systems and the computer science around it is very complicated. And the more decentralized something is, generally the slower it becomes, because there's all these conflicts that need to be resolved. Conversely, you can make things very fast, but they're generally going to be centralized. And so that's sort of what led to the blockchain trilemma that Vitalik proposed a while back. And what Silvio felt was, by rethinking the fundamental computer science, that you could find a way to eliminate these drawbacks. And so what Algorand, and the result of that research became Algorand. And so that was published as an academic paper several years ago. Silvio got a lot of interest as a result of it. Then following that, there was sort of debate as to whether Algorand could actually be implemented, or it was just theory that was too complicated to actually work. And so a group of people at CSAIL at MIT, the computer science department, decided that they would just do it and show people that it could be done. That ended up happening. They submitted their findings as a paper to the ACM and presented on it and did some scalability testing. So that's what ultimately led to Algorand kind of spinning out as a business. In terms of like the tech, I think the very simple way of thinking about it is Bitcoin or other proof of work style systems, the miners control the network and secure the network. And the more miners you have, the more security you have. And I think that's ultimately what helps drive, especially Bitcoin, which has the most mining power of any network. The second sort of wave was proof of stake, but tended to be, I'd say the most popular was delegated proof of stake, where you have platforms that have effectively a set of people who are chosen to be the validators. That's true in platforms like EOS and others. I think they've proven that works well, although it's not particularly decentralized because those people get selected via some process. So Algorand is, from a proof of stake standpoint, the first public permissionless platform. Anybody can join, anybody can participate in the network, and that's what we think very important. And I think that sort of fundamental basis that was established by Bitcoin is necessary. We believe very strongly that a decentralized source of truth needs to be public and permissionless, and that other applications can spawn from it. But if you don't have that strength, then you don't have kind of the right underpinnings for a network. The way Algorand works, that's sort of fundamentally different from other platforms, is it uses a novel form of cryptographic sortition, so i.e. a lottery, and that forms the basis for a new Byzantine agreement, which is kind of a long-held problem on solving problems in distributed systems. What Algorand does, and the problem with existing Byzantine agreements, or the prior ones, which hadn't really been tackled in a couple of decades, is that if the leader becomes malicious, i.e. the person proposing a block, it's very hard to change to a new leader, and effectively shuts down the protocol for a long period of time. And so what Silvio and the team here designed was a new form of Byzantine agreement where the leader changes every block, and so that it really kind of wipes out a whole series of attack vectors that people can take on the system. But to make it really simple for anybody that's listening, the way Algorand works is that every single person who's online can participate in the network. For the people who are online, every block, one person is selected at random to be the block proposer, and about 1,000 people are selected at random to be the block validators. And the block is then circulated along with the votes. Now, those people do not communicate with each other, so nobody knows who they are. The signatures, when a majority of signatures are received, showing that the block is confirmed, then the block is confirmed. But the I think unique point about Algorand is that because there's no communication and the lotteries are running on people's own computer in secret, you don't know who the proposer is, and you don't know who the validators were until the block is already confirmed. And at that point, it's too late to attack them, because for the next round, it's a whole new random group of people that are selected. And so as a result, there's no computational power needed to confirm the block, because these lotteries are very fast. The second is the speed at which the network runs is limited only to the speed at which the block can be propagated around to the nodes that are online. And so that's resulted in just real world for us. It's about 4 seconds a block, a little bit over that. We have immediate confirmation or immediate finality of every transaction, because there's only one way to get a majority of votes in favor of a block. And so kind of that simple sounding thing, which is that people run their own lottery when they're online, they support the network, is actually quite complicated in terms of the actual technology and engineering work that had to go in to make it work. But the nice thing also about it is, as more users join the network becomes more secure, but it doesn't slow down the network, because the committees remain kind of a similar size kind of every time. So the network scales to hundreds of millions or billions of users, will continue to kind of run irrespective of that, and becomes more secure the more users that there are online. In a similar
for the near and medium term, though, what risks are there as you see staking services emerge, particularly at the big exchanges, right? So this is going to be, I think one of the key themes for 2020 is watching really some of these exchanges falling over themselves to support staking, right? We've seen this with Tezos.
For sure.
We're certainly going to see a massive influx for ETH for phase 0 as the beacon chain gets launched. So what does that mean? You use the term persons, right? But ultimately, if it's easier to stake and your options are either stake or get diluted down, as new network tokens are released, then you more or less have to centralize the services with a few of the major liquidity providers, a few of the major staking services. But I'd argue that the exchanges, because they already have custody solutions in-house and all the liquidity, they're probably the natural centralizing forces here. What does that do to the security model, not just for processing transactions, but also thinking about truly decentralized applications that aren't effectively just processed by a consortium of major exchanges?
Sure. So I think that there will for sure be concentration points. I think we see that in the real world as well, and but I think also you need to be mindful of kind of how that evolves over time. I think one of the nice things about Algorand is that it's not just staking providers that receive rewards. Every user in the system receives rewards, and so it's true proof of stake. So it's not. I think that there's a big problem in proof of stake where there's a tendency to create systems where not everyone can participate easily. And I think keeping the bar very, very low so that any individual user can participate as easily and receive rewards in the same way that kind of bigger providers can is important. And that's the way Algorand works. Everybody who has stake earns rewards and can participate in the network. Now, I think your point is a very good one. And I mean, I think we're starting to see that with other chains. I've seen it in some analysis recently that large amounts of people's nodes, even when they are run by different organizations, are still ultimately hosted at Amazon or a few other cloud providers. I think really making sure that there's diversity of participants, geographic diversity of types of participants is going to be increasingly important. And I think if you look at our nodes, we have people running infrastructure on every continent except for Antarctica, and doing so in a variety of different networks. And so I think it's important not only to ensure there's diversity in terms of like the types of people running it, but I think geographic diversity is important too. And I think it's a good thing for people who are building applications to think about, should they be supporting the network? Do they need a node locally in their applications? Should they have one in their country? Those are the kinds of things that we want to see. And I think what you'll find emerging over time from Algorand are incentives that kind of align with people doing that, and that ultimately the people kind of building new applications need to be the ones that also have influence over the network, not just the exchanges and others. And so again, it kind of goes back to the developer point, which is our big focus is bringing kind of new entrants, new people, new geographies, new perspectives into the space, but making it easy for them to do that and easy to participate in the token economy, but also easy to participate in the platform itself and build applications, because ultimately that's what brings balance into the ecosystem. I don't think it's whether arguing like one exchange or another exchange has too much influence. I think you just need to grow the system so that people are driving activity through use cases and driving demand, and doing that wherever in the world they happen to be. And I think that's what will lead to kind of the right decentralized outcome, but also lead to the right outcome for the platform as a whole.
So let's talk about the distribution design and some of the decisions that you all made coming to market. So there's this pernicious problem for any new project that's launching, that you can't recapture the fortunate accident of Bitcoin or even Ethereum, right? Arguably,
Sure.
Because back when they launched, they were so new. No one knew that they were going to explode in value to the extent they have. So you didn't have valuations that were bid up so aggressively. You didn't have the concern around whales really dominating your network if they, owned the majority of the stake and then just continued to as almost a rentier over a long period of time. So walk through some of the design decisions for the distribution, because it's a pretty novel approach that you had, which has kind of lower bound support and price support for some of the early backers in the form of this rebate system that you've proposed. So let's dig into that a little bit, because the economics of it get a little bit wonky, but I know the design is at least intended to ensure that you can do this properly and distribute over a long period of time.
Yeah, so I few of the sort of goals that we had, and definitely thinking about sort of this issue is one that a lot of time was put into, and there's sort of a couple. So one is making sure that there's kind of bootstrapping of the network and enough people online to drive security early on, and I think we did a good job of creating kind of a slotting system where people could come and volunteer to run nodes and earn tokens over a period of time. The other, though, is ultimately it takes time for the network or for demand to grow for a network, and the algo is the fundamental token of the Algorand public blockchain. And so as people build, they'll need to they'll need to use it to kind of power their applications. But also, we're very conscious of the fact that it seemed like there were a lot of people that were sort of pulling numbers out of thin air. And we didn't think that was really the right way to try to determine what the value of the network ought to be. It really should be the market that determines that, and not be up to the project at all. And so, the first idea was really to use an auction mechanism to initially set the price and kind of create the secondary market for it, and do that in a way where the project didn't really have influence over what that price was. And I think that was kind of a novel concept at the time. We've seen some other people start to experiment with it. The other was, I think if it goes back to both on the developer side, but also on the end user side, our point of view is that there's a need for people to be exposed to blockchain platforms and the underlying technology. It's also a market that's clearly volatile, and the people, may have concerns about risk. And so the idea behind the refund policy was to allow people to get involved, to investigate the technology, learn about it, but do so in a way that sort of limited downside risk from a financial standpoint for them. Now, I think as anything in complicated, economic systems, I think there was, definitely things that worked and things that didn't work. And the Algorand Foundation is kind of working on the next wave of experiments that they're going to try there, and to continue injecting tokens into the market. But I think one of the important things there is that if you look at just sort of supply and demand, kind of matching those two things up over a longer period of time, and not just kind of having a market emerge with sort of all the tokens is a good, I think, way of doing it. Now, obviously, a platform like Bitcoin has done it by injecting more token rewards early on and less in the future, and then ultimately having transaction fees sort of build up and redistribute tokens that way. I think that's proven to be quite successful. I think here the mechanisms are a little bit different, but the sort of philosophical underpinnings are the same, which is, kind of let the market dictate when more tokens should be entering circulation. And I think it's really a matter of kind of finding the right mechanisms to do that. So definitely, I think, there needs to be more economic experimentation. And I think on kind of that one, we're seeing really interesting stuff in the DeFi side. I think you're starting to see now kind of associated with proof of stake platforms, different, yield opportunities that people have been creating, different types of financial instruments. And a lot of them look sort of fundamentally different from kind of the traditional, bonds, stocks, and other things that exist in a more traditional financial world. So I think we're really excited to kind of be a part of that. And by the way, that's, if you go back to the tech, that's one of the things that we've really tried to do, is also make it easy for people to create any type of financial instrument they want. We're the only crypto project that's partnered with ISDA, which is the International Swaps and Derivatives Association. We're in the process of rolling out a series of templates that align with kind of the standard financial instruments that they specify. And we think that being kind of an intersection point between the traditional financial world and this emerging decentralized financial world is something that's a real need out there right now. And the chess example that you brought up a couple minutes ago, I think is a good one, where they're doing an IPO in the London Stock Exchange, but also issuing a security token on top of Algorand. We think there's going to be a lot more of that. And what that enables them to do is open up the opportunity to invest in chess to their global audience, many of which don't have access to the London Stock Exchange. And I think while for people who live in America,
that security token is going to be issued on Algorand, but it's not actually algo.
No, that's right. It's on Algorand, but I think that's where we think there's definitely two different things going on. So I think we definitely have thought of like novel ways to sort of bring the algo into circulation and try to have the market kind of determine, what the value of the network ought to be. And separately, we've also tried to create the plumbing to encourage other people to come and do their own economic experimentation.
Sure. Yeah. I mean, and the latter is kind of table stakes, right? You're competing for developer mindshare. But I want to just double click on the auction schedule, because right now it's 100. I hate the term market cap, but we're stuck with it forever, I'm convinced. But you're more or less at around 100 million in market cap now, in terms of what's actually circulating, depending on your definition of circulating. If it's the circulating unencumbered, like truly out in the wild, you could say it's somewhere in the 450 million algo range. So that's less than 5% of the total supply that's ever going to hit the market. We've seen from Zcash, we've seen from projects like Grin, many of these tokens, proof of work, proof of stake, whatever, that have massive kind of long-term supply issuance that is scheduled and will remain an ongoing challenge for them to distribute. We've seen what's happened with the suppressant of just the price of these tokens, because you're basically, you have to assume if the supply is going to increase by 60% next year, that there's going to be 60 million of net new inflows just to kind of run in place with the price. Mm-hmm. So how do you rate limit that, right? Some of it, I guess, is baked into the auction structure, right? But there is this, I would argue, a fundamental value question for most projects that are in this bootstrapping phase, where it's tough to build a really robust community if they're just getting their faces blown off from an investment standpoint. Like, there's no way around it, and it's probably the toughest balancing act that I'd see early teams grappling with as they come to market.
I think that's a fair point, and I think it's definitely a challenge. I think a few different things. One, it takes time to establish a project and kind of just understand what the demand characteristics are in the market. Part of that's going to be driven by use cases and just organic need for the algo. We expect that to grow over time. I think if you look, Algorand 2.0 launched like a very short period ago. We're seeing good signs that there's a variety of applications getting ready to deploy. both from the stablecoin realm to the DeFi realm, and we're engaged with a lot of folks in the traditional financial world as well. So I think we feel excited about the interest level in the platform, and I think compared to like a more traditional let's say software platform, I think there's I think I've never seen the level of inbound interest that I have here, and so I think that's pretty encouraging. At the same time, I think if you look, definitely economic adjustments also need to be necessary or need to be made, and I think even if you look at what central governments have done in terms of managing their monetary supply, it's not a static thing. And so I think there are definitely two schools of thought. There's one which is kind of the Bitcoin style, set it and forget it. We're going to have a monetary policy that sort of exists forever. And I think in that case, having a slightly deflationary plan is probably the one that's most sensible. But I think there's other ways to do it as well. And I think there's guides you can look to. If you look at economies like Singapore, they tend to manage within a range against a basket of other currencies, and have it be slightly with a goal of having it appreciate slightly over time. I think those are the kinds of lessons that people should look at, and there doesn't need to be like a specific time schedule for tokens to enter circulation. I think it's a matter of building out the network and having these organic demand characteristics build over time. I think it's a little bit tricky right now because I think we're still kind of at the start line in terms of like real utility in these platforms. I think we see a lot of encouraging signs, but I think there were a lot of platforms that were launched in the past that weren't necessarily seeking utility that was like substantially different than the platforms that came before them. They had kind of a different angle or whatnot. And so I think, that bigger wave, when you go from the 40, 50 million people who are involved in blockchain today to a billion, those are gigantic differences in demand characteristics that are going to have to exist to satisfy the needs of the applications that are servicing those people. So I guess the one point is, the killer apps haven't come yet, and we haven't seen that real spike. And I think, if you go back, if you think about like the internet days, 97, 98, 99, go back and, look at her. I just saw a recording from the Today Show from 20 years ago, where they're online saying, oh, what's this internet thing good for? Why would I shop online? I could go to the store. I think we're kind of a little bit of that. So I think one, the base case is over the next 20 years, if we see the same level of innovation in the financial world and the same kind of depth of change to the financial system, like we're not fighting over this like very small demand pool that exists today. We're talking about, reforming how the world exchanges economic value on like a very large scale. And like that's, I think the amount of value and network value that can be created over that is staggering. So I think right now we're kind of just worried about this bootstrapping phase, but you got to like play it out a few rounds down the road before you worry about it. Now, that said, I'm not trying to sidestep your like actual question.
Well, yeah, I mean, I think everybody agrees on everybody agrees on the vision, right? So it's more how do you go? Not as you could argue 0 to 1 was the launch of the network and the testing of some of these different novel concepts that you've brought to market, but how do you go from 1 to relevant, maybe? so the platform tech, let's just assume that it works, that it is robust, it gets battle tested, and it continues to kind of prove its mettle. The question, and this kind of dovetails maybe to the last point that we talked about, is where do you have to strategically be focused in 2020, 2021, knowing that yes, maybe someday there will be e-commerce at massive scale for everything. But the challenge that every crypto platform, I think, is grappling with right now is what's the equivalent of the Amazon bookstore, right? Yep. Before you get into the everything store, what's the bookstore? And so, maybe we'll end on kind of thoughts on 2020 and what markets you're most excited about that are being developed around Algo right now.
Sure. Actually, I'm going to answer that question in a second, but I wanted to just circle back on one other point. I think that the token supply issue is like a real one, and one in the market. I think there's been interesting developments in the Algorand ecosystem that I'd encourage anybody to go check out. One, not least of which is the group of people running Algorand nodes voted amongst themselves to extend their distribution schedule out in several years into the future. I think that's a benefit for everybody involved in the project. The second is, I think the Algorand Foundation, and they'll be sharing more about this, is going to be reducing the number of tokens that are entering supply. So I think one of the things you have to do is just get out in the market, see what supply and demand looks like, see how these things are emerging, and make adjustments to course correct. I think it's also important that the community make those adjustments, or propose them. And I think we're starting to see really good decentralized governments emerge on the platform itself. So I think those are all healthy developments that are really good. Now, in terms of 2020, I think as I sit here today, when I first started looking at the space at the end of 16, early 17. There weren't large enterprises and traditional financial services companies and all these DeFi applications kind of building on the space. And I think what we're starting to see now are real work that's been going on over the arc of a couple of years that's starting to emerge, whether it's digital sovereign currencies. I think if you look at projects even like Libra, you can love it or hate it, but I think the reality of that it could bring a lot of users into the space is a real one. We're starting to see tokenization efforts from traditional financial services companies that want to expand how they offer or change how they're offering products. And so I think our real goal for 2020 is to continue to evolve our platform in a way that kind of really helps encourage people to come into the space and get their work done and launch these applications for real in a way that people can actually interact with them. And if you look at the kind of evolution that Algorand has been going through as a platform, part of the reason for launching V1 wasn't just to launch the protocol. It's that the conclusion was that if you don't have an actual existent platform that's live and people can interact with, then you're selling a dream. And the reality is, in crypto, 90% of the projects don't ever launch. And so we wanted to just show that we can deliver the fundamental tech in the first place. Algorand 2.0 is really about bringing the right fundamental kind of layer one primitives into a blockchain that's performant and can enable people to deliver large scale applications, do it in a way that's safe and secure, that scales as fast, where payments are final, they understand where the assets are owned. I will say the use cases there that we expect to see emerge first are more in the DeFi world, where people have kind of decentralized startups, especially layer two things around identity, around security tokens, really not only bringing the fundamental layer one primitives, but partnering with the right platforms in layer two, so that as people come and want to build kind of business applications, that those things are there. I think the next steps are really thinking about, what are the needs of the traditional financial world in terms of meeting their own regulatory obligations, handling things like privacy, how do they handle sort of the different obligations they already have, but do that in a way that doesn't preclude them from participating in public networks, and ultimately being an intersection point where, as more traditional financial services companies want to create financial products that are in the decentralized realm, that we help them do that in a way that makes sense, and takes advantage of some of these new technologies and innovations that people have been developing. And I think just like when we launched Algorand V1, we shortly after announced the wave of tech for V2. We just launched V2. Everyone can kind of stay tuned. We're going to have another wave of tech that we announce that I think is even more innovative than what we've done so far, that people are going to be able to take advantage of. And so I think for sure that's one of the things that we will continue to bring to the market. But I think that 2020 we'll start to see definitely in the decentralized finance space, like real applications that people can interact with. And I think we'd feel good if we started to see more hybrid traditional decentralized financial products in the lines of like what World Chess did come out in the market, and doing the best we can to help curate more of those use cases and kind of bring them out into the world for sure.
Well, best of luck with the rest of the year. Certainly excited to have the project in the wild. It's going to be very interesting to watch, I guess, is the political way to put it. I'm sure you probably enjoyed Gav Wood's article on CoinDesk, which everybody's talking about. The blockchain wars are coming, but if the market does grow, it's going to be mostly off the back of folks who are finding early use cases versus racing to zero in terms of ruthless competition.
Yeah, for sure. Well, thanks for having me on. It was really great talking to you, and let's do it in person next time.
Absolutely. Everyone, thank you for joining in. I hope you enjoy the first iteration of the 2020 version of Unqualified Opinions. Let us know how the sound quality was and the visuals. Can't change this, but can at least give you a clearer picture. Maybe you're not asking for that. But until next time, peace.